Now we're going to get into some seasonal retail stocks. Target, big move. Target's apparel sales on fire. That's bad news for everyone else. I don't know if that's really bad news for Walmart though, all right? Target's apparel business is outperforming other categories. We are picking up market share from a number of competitors, whether it's department stores or specialty. Target CEO Brian Connolly says in a phone interview with CNBC. Apparel sales are up more than 10% during the last quarter, which helps strengthen Target's profit margins. So, for those of you who like Target, let's go to another one. Tiffany. This is the season to give jewelry, right? Tiffany is up 4.7%, and that was as of yesterday on a report LVMH boosts offer. So Tiffany was in talks to be bought by LVMH. Those talks disseminated, and now they're bumping up the offer. Postmarket wrote that it has raised this offer for the company to $130 a share and got access to Tiffany's books. That's huge. That is huge. All right. So let's go down a little bit. They closed today, that was yesterday, at 123.33. The new reported offer marks a 5.4%. So the people in Tiffany are like, yeah, baby, give me. When they want to say, what is it in the movie? Show me the money. That's what Tiffany is saying about LVMH. And LVMH is going, yeah, baby, I got your money. And then go make it rain. So maybe that's what it's going to be all about. So that's on Tiffany. Another big name, Macy's. Macy's online sales growth slowed. Macy's been around since forever, right? But that also means it's more profitable. Macy's says its online growth slowed during the fiscal third quarter. As a result, the retailer says it had a lower than expected headwind from delivery expense associated with our digital business. So you remember, if you're going to get a lot of stuff online, a lot of them pick up the cost of freight or shipping, right? If the online sales for Macy's is going down, guess what? They don't have to pick up the freight. Interesting. That is an interesting stuff. Macy's earnings tops expectations. So that's Macy's. Let's talk about somebody else. Oh, Walmart. Walmart posts strong results ahead of holidays, earns praise from Trump. Walmart Incorporated raised its annual outlook on Thursday as a robust economy. Remember? Now, you understand how all of this piggybacks, right? We talked about what's going on in the economy. We talked about interest rates and how that affects. So now, based on a robust economy, people have got more money in their pockets to spend. They're going to go to Targets. They're going to go to Walmarts. They're going to go to Macy's. They're going to go to Tiffany's. So all of these companies overall are looking good coming into the holiday season. The world's largest retailer posted better than expected earnings, comparable sales, and e-commerce growth in its largest market during the third quarter. It now has posted more than 5-year streak of U.S. growth, unmatched by any other retail chain. Now you know why Walmart is the biggest selling physical store, where Amazon, on the other hand, is the biggest online store. All right, and that's what I've got for retail sales. Let's go back into the software. Let's go find my companies for retail sales. Target, that's at the bottom. There's Target. Amazon. All right, we didn't have a story on Amazon, but Amazon is the biggest online business. Walmart, bingo. Macy's, bingo. And Tiffany, bingo. Here's our 5 stocks in retail. Amazon, grossly overvalued. All right, upside potential, good. Safety, good. What's hurting it right now on Amazon? It's going down in price by way of RT. RT tells me that short-term price trend of Amazon is in a downtrend. It's a hold, but they are growing their earnings at a clip of 30% a year. Let's look at Macy's. Slightly under its value, good upside potential. The safety is not there. When it comes to earnings, it may or may not meet its earnings expectations, and the stock is going down in price right now. It's a sell recommendation. Good positive earnings, negative earnings growth rate. That's never a good thing for a store. Target, right at its earnings, right at its value, fairly valued, good upside potential, good safety, and definitely with that news, It is definitely in an uptrend. How about this is one of the 5 that's got a buy recommendations. Earnings per share is $6.47, and they're growing their earnings at a clip of 15%. Man, Target looks strong, doesn't it? Tiffany's, a company that's been around. It's the buy place for the rich and famous, right? One of them. Tiffany's big time jeweler. Relative value, long term, may not want to own Tiffany right now. It's got a good safety and it's got a good up, and it's moving up right now. Long term though, be careful. This is probably a good shorter term trade. It is a buy recommendation. It does have positive earnings and growing their earnings at a clip of 7%. Walmart, what's more to say? Walmart is overvalued though. Good upside potential, good safety. It is in an uptrend, not by a lot, but still in an uptrend. Hold recommendation. It's got earnings per share positive, and they grow their earnings. This is the third out of the top 5 or so, 3 out of 5. It's falling number 3 as far as growing their earnings. That's a big conglomerate. And 14% a year on a store that big, that's good news. All right. So, but which one is the most diversified? When you say most diversified, I'm going to say they all are in one industry, Jay. They are all in one industry. So keeping that in mind, I don't know where the diversification, this is all in one industry. So let's do it this way, Jay. Jay, I'm wondering, asking which one is the better one to get? Target. Look at Target. Put this on a 3-month graph. Love it. Target's moving up. Gap up yesterday. Follow through today, a little bit of a give back. Look at the little bit of indecision on the stock today. But overall, over the last 3 months, earnings looks good. Volume, big pop in volume yesterday. Let's look at the next one. Woo! Amazon, boy, oh boy. As much as I love that Amazon is big boy in the online retail, right now may not be the right time. It's below my 20-day exponential moving average. It did move sideways for a little while, but it's got a level of support sitting at about 1690.03. 1690.03. All right, let's go to the next stock. I'm not a real fan of Amazon right now. Walmart, a little bit of a sideways move right now. It's got a good level of support sitting at 118.17. Love the rising earnings. Watch the volume. Well, the volume will pull back as the stock starts to move sideways. So that's not abnormal. But I am looking currently above the 20-day exponential moving average. It is trading right at the floor. If it falls through the floor, that's where you get concerned. If it falls through the floor, that's where it gets concerned. But that hasn't happened yet. Let's go to Macy's. A lot of sideways move right at support as well at $14.16. Watch the earnings per share. The earnings is the engine that drives the stock's price higher. Falling earnings, what do you think is going to happen to the stock? All right, so just keep that in mind. And the last stock should be Tiffany. Man, with that buyout type of situation, gapped up, it's just hanging out, waiting for the deal to go through. All right, and once it goes through, Tiffany will go away, and it will be LVHM, whatever the company, Tiffany will go away. All right, be careful with this because once the deal is done, remember they put in the order they put in the offer at 130. They put in the offer at 130. The stock's price will rise up there, and it'll stay there. All right, so that's on my retail sales. Let's go see the questions you're asking. Amazon. I like Amazon. I'm not feeling Amazon right now. I do like Target. Target looks good. I do like Tiffany's. Tiffany's looks good, but I do know that Tiffany's in talks to be bought out. Be careful with your Walmart. Be careful with your Macy's, and be careful with your Amazon. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.